Here we go, here we go, here we go, here we go. It's markets in the morning. Let's go. Hey, what's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Welcome to Markets in the Morning. Today is Thursday, September 21st, 2023. This is Markets in the Morning, where we take a look at the price action of the cryptocurrency market, the Bitcoin price chart, XRP, the altcoin market, and look over there at the stock market as we get ready for the stock market to open up in 1 minute from right now. Coming off of Fed week, typically the most volatile weeks that we do see in a calendar month. It's been 2 months since we've had a Fed week. Here we are having one, and just like usual, we're seeing a lot of volatility happening the day before, the day of, and the day after. We are starting today off with a lot of volatility in the market, so we'll go ahead and quickly just dive right on in. As we can see, Bitcoin is sitting there at $26,500 as we did see stock futures overnight take a dive. Let's go ahead and pull up the Dow and the stock market to see how we're doing as we're opening. So far, a little bit better than it's been during pre-market. We can see that the Dow is down about 100 points. You can see the S&P is down about 28, which is quite a bit, and the NASDAQ down about 1%, 147 points as the market gets kicked off and opened. Looking over here at stocks, you could see really mostly everything's in the red. Somehow you've got United Health and Netflix over there in the green, but Bitcoin sitting at 26,515. So nothing structurally broken in here, but definitely a quicker move that is probably causing a little bit of stress, especially since we have the DXY continuing to shift up. This is something we've been talking about for quite some time. I've even made a whole video dedicated really to the DXY as we're approaching that 106. That would be where like the extreme would be. Any type of like major market breakdowns or any type of flip arounds or reversals that have happened in the market, 106 seems to like kind of be that marker of where something ends up happening. We're reaching kind of the extremes that we've talked about. We've spent months talking about this. All of 2023 is about getting down to 99 to 100. It shoots right off of there. Now we're right back to the top of the range. We're getting there. We're seeing extreme price action. We're seeing big volatility over there in the stock market, seeing big volatility over there in crypto as we're now approaching there. So all eyes to see, are we going to be able to reverse now that we're back near the top of the range and everybody's screaming Armageddon or doom, right? So we've got 26,500 for Bitcoin. Major things, of course, none of this really has any significant meaning to me personally in here, and I've gone through and shown all the different videos of it for Bitcoin's recoveries, so long as 24.7 thousand does hold, or $24,700 does hold. This is still a continuation of a sideways range. As long as that range continues to hold and have expectations of moving up continuously until the range breakdown happens. Should we break below 24.7, bias immediately flips. It immediately becomes there's big problems happening there in Bitcoin. It is not what most people want. You hear a lot of the calls for $12,000. I always say, show me evidence of any time Bitcoin was in a recovery market, or you're 2.5 years after the peak of Bitcoin or the peak of the altcoin market, or you're even a year and a half after the peak of the altcoin market, and or a year and a half after the peak of Bitcoin. Show me an example where you go to 12K and that's okay, or you go down that far and it's okay. It's not. We don't have examples in every single recovery of Bitcoin where we go break back down below a previous range that we spent a lot of time in. A lot of people do point, of course, over here to 2020 when we worked out a range for 5 months and then just fired away, never to return to it. However, we came back to back test it. That's not the case of what we have in here at all. An equivalent price for like 2020 would be if we got up to like 50K and then came back down to touch. We're not there. We didn't even come close to doing that. So this is just like what we saw in 2012. It's like we saw in 2015 and 2016, where you see these kind of recoveries and you range for 6 or 7 months and then shift your way up. If we went and took out 24.7, though, it would immediately say this time is different. The most famous words of anybody. But typically this time is different is the thought process of, maybe stocks never can go down. Maybe we'll just go straight up to the moon and then we'll stay there and we'll never crash down. Now, this time, that is what this time is different. Or maybe we actually are going to zero this time. That's the this time is different. seeing something structurally happen different on a price chart is not at this time is different. It's actually structurally different. So if we do break down here, of course, it opens up the whole can of worms of have what we talked about since 2021 and early 2022 with Bitcoin, heading much lower potential. As long as we're holding it, though, it's just a bunch of fear on top of a support. Totally normal for everybody to be scared on top of a support, but it's until we break through it. If you go down through that support level, biases for me in particular change drastically for Bitcoin, probably for crypto a lot too, at least in the short term until the picture clears up, because that probably won't be a good sign. The story would be same over here for the Dow Jones. So we've been talking about how high the Dow Jones is in relation to the roaring 20s, that you're only 13% away. We've gone up 450%. We're only 13% away from being as high as the roaring 20s that led to the Great Depression. Things that we've talked about in here is if you actually do go take out a new low. So for like the Dow, it'd be like 33,600. If we saw, like I'm giving you warnings here, if we saw Bitcoin go take out 24.7 thousand, and then if we saw the Dow take out 33,600, my biases would change very, very, very quickly. Until then, there's literally nothing to be panicking about, literally nothing to be worrying about as long as those levels are holding. But that would be the line in the sand where things would be worrisome if we do end up having that. So as we're still sitting on top of the range, things are okay. As the Dow or as the DXY hasn't broken out, we're still okay. Everything is just fine. I just know that in moments like this, there's typically a lot of panic that happens in markets. Right now, there's nothing to be worried about yet, and there are lines in the sand where the worry should happen at. But as of right now, as of right here, it's just not there yet. So keeping our eyes on the Dow throughout the rest of the day to see if things recover as we expected. We expected there to be a lot of volatility as we came out of the Fed week. So things that ended up happening yesterday is that the Fed did pause as expected, but the Fed was hawkish. And so what we're seeing over here is we're seeing long duration yields rise. And they're rising pretty rapidly over here, like the 30-year, the 20-year, the 10-year, the 5-year, really kind of in order. The longest duration yields are gaining some strength. I guess the term for this is like a bear steepener. So we're seeing short duration stuff not really gaining at all. As a matter of fact, small losses over here where we're seeing longer duration yields really start to gain some strength. Of course, the concern with this on the bigger, longer time frame is you think to yourself, all right, when people invest in the stock market, what are their expectations? And if you're like 21 or 22 or 23 and you're like a degen in the markets and you're like, no, I expect to make 10,000% a year, it's not what most 401k investors are looking for. They're looking for anywhere between 6 and 8% annually. You can pretty much buy a 10-year treasury for 4.5% and like the safest you can get, and it's fine. So that's kind of a concern out there. I just lost my train of thought. Hopefully it comes back. Damn. Anyway, all right, maybe it'll come back to me here in a second. That's a concern to see that we're seeing rates rise. I'm not like a rate specialist in any way, but I do know that there is concern that those rates are climbing so rapidly. We'll see if that maintains itself. So anyway, the Fed pauses. The Fed kind of gives a little glimpse that they're willing to continue raising rates if necessary. Of course, we've seen the overnight lending market completely contradict that, right? Going from $2.5 trillion down to $1.5 trillion. So money totally flooding out of there. Maybe we're seeing a little bit of that correcting itself, saying, maybe not. But we'll see how this goes. It was totally expected. We see, like I tried to set this up for you guys. We'll see volatility the day before, the day of, and the day after. So hopefully throughout today, we see things really start to calm down throughout markets, and then all is well. The major thing to watch for with the Dow is going to be that 33,600. And it's like, well, why is that level so important? Does it mean that if we just get through there, that suddenly the stock market starts falling apart and everything is just gloom and doom? Not necessarily. I don't have any insight to tell you there's some like liquidation level that happens here at 33,600 by any means. It's just when we go back and look through every uptrend that has happened in the stock market, we can see that there's always the series of the higher lows that happen in there. Each time we end up getting some type of a lower low to occur, that's when we start to see things fall apart. Not necessarily that they happen overnight. There can be bounces and then it just kind of is just rolling its way down. But we don't have examples to look back on the Dow, at least in the last 15 years, to say, hey, it's okay to go do something like that. That each time this has happened over the course of the last 15 years, it was a bad sign. So keeping that in mind, that if we go below 33,600, that's the worry. But hopefully today we just kind of settle out and everything turns out okay. All right. As for the DXY, this is the big one to watch out for, right? We are back up to the fear level. We expressed that this would be where all the fear would reside at, where all the panic would reside at. Here we are. We're seeing extremes in market. We're seeing the market move heavily as we are now back up in here. It's probably the steepest 3 days that we've had now that we have the DXY back up near that 106. So all eyes are on here to see that we do get rejected. The gold has pulled back aggressively today. So we've seen that also with, not only have we seen it over there in the stock indexes, but we're seeing it over there in precious metals as well. You got gold down $13 today, almost 1%. You got silver down over a quarter, so it's down 1.25%. And now that the market has been running here for a minute, it looks like the NASDAQ has kind of settled down a little bit, but the S&P is, looks like it's gained a little steam, and so is the Dow Jones. Dow Jones down 240 points to get the day going. S&P down 36 points to get the day going. NASDAQ down 140. Still, somehow, some way, you've got Netflix and United Health sitting in the green. The loser of the day, you got Coinbase over there. As for cryptos, nearly everything in the red, but somehow Cosmos Atom remains in the green. So here we go. We're now back at, for Bitcoin, you're back kind of at a previous resistance level. We'll see if this ends up being some support coming in for it right in here. Otherwise, it's just washing machine action happening in here with really no meaning. And I don't know how many videos I can really make by reiterating the things they keep saying, being like, hey, 24.7 matters. Otherwise, nothing. It's like, all right, 33,600 for the Dow, 24.7 thousand for Bitcoin. Otherwise, everything else in here is just noise, right? It's like, all right, well, how else could we say that in any more creative ways possible than that? And that's just kind of where we're at right now when it comes to the Dow, when it comes to Bitcoin. As for XRP, of course, it's still just meandering along. No big moves happening in there. And XRP to scream, hey, this thing has reversed. It's still just been running sideways at the same prices it was at back in late April. So we've been right here for over a month, and we're still just sitting there currently right now. So I think that's really where we're at. So today, so what I'm hoping for, right? So I go into Fed week, and my expectations are always it's going to be extremely volatile. It's always going to be the most volatile the day before Fed Day, the day of Fed Day, and the day after Fed Day. And then hopefully at the end of the week, everything has settled. So my expectations are there's going to be volatility today, just hopefully nothing too insane that breaks anything and crosses any lines in the sand. Like for Bitcoin, that's going to be 24.7 thousand. And then for the Dow Jones Industrial Average, that would be 33,600. Otherwise, just a lot of wild volatility to happen today, but hopefully we don't have anything structurally get broken. And that's really all I'm watching for today. So I think that really covers it. Oh, okay. I now remember the thing that I lost track of. One thing that caught my attention yesterday during the Fed meeting was a question that was tossed up to Jerome Powell. And it's kind of one of those things that I maybe had heard about in the past day or two. And kind of dismissed it. I think I saw somebody tweet, how is that even possible? That he was asked about a government shutdown. And apparently there is something looming for the United States for a government shutdown on October 1st. And it's another one of these deadlines things where Congress has to get things passed. We see this all the time. We see this stuff where it gets right down to the final wire, and then they're able to get stuff through. But we've also seen times where the government does actually end up shutting down. And I don't know what the implications would be on the market with that. But that's something we'll probably be wanting to keep our eye on for the next couple of days and see if that progresses at all and if that actually becomes anything or not. So probably today, if you have time, maybe read up on that. I'm going to spend more time reading up on that and probably try to watch some interviews on it to see if there's any validity to it, if it's just a political weapon. But it does appear that we are on the brink again of a government shutdown in 9 days from now. So, yay! Add more fun. I'm just kidding. So, all right. As for news going on, Cisco acquiring cybersecurity company Splunk in cash deal worth $28 billion. For this to be front page, I'm going to guess that is paid for. Dow Jones dropped more than 150 points as interest rates climbed to multi-year highs. 10-year Treasury yield hits its highest level since 2007 as jobless claims declines. Right, we did get job data again today. Initial jobless claims were at 201,000 based on expectations of 225. Also, continuing jobless claims were below expectations. So there are not people applying for unemployment. There are not people continuing to apply for unemployment. And the labor market still seems to be holding up okay. That domino has not fallen yet. U.S. jobless claims fall. Oh, there you go. 201,000, the lowest since January. Futures drops and yields rise after jobless claims. This all happened prior to jobless claims. Bullard says rates may need to rise further amid strong growth. BOE keeps rates unchanged for the first time in almost 2 years. So ex-Goldman bankers with fortune for controversial bet on gold. Cisco, India suspends visa. Canada pulls diplomats. Corporate America brings in new skinny look to stock market. What? Okay. UAW negotiator says the new Stellantis offer doesn't look good. Okay. So that's still going on. The thing that we always have worrying the market is this Mount Gox stuff. And in that time, I said, these are kind of like things from experience. Like when you have extreme tether FUD, right? I've always been like, I don't let the tether FUD get to me. Here we are, we're beyond all the tether FUD, right? Kind of one of those things. Maybe there's going to be a day where it does happen, but I've been through that rodeo so many times that when I come on here, I'm kind of like, we see this happen all the time. And the Mount Gox, right? They're going to get all of their Bitcoins and it's going to be the end of the world, right? What volatility? Bitcoin price dismisses the Mount Gox. So I guess the Mount Gox payments have been delayed or whatnot, right? And that's just kind of what always happens. And so just kind of showing you that again, when you get real panicked over the Mount Gox stuff or over the tether stuff, we kind of always seem to get beyond that. And it seems to be something else that ends up being the problem. But anyway, price dismisses the FOMC and Mount Gox with the 26.7K dip. Here we go. Bitcoin bulls missing in action after Mount Gox delays the Bitcoin repayments. I can't tell you how many times I've seen this Mount Gox Bitcoin repayment delay thing. I mean, I've seen it 100 bajillion times. Bitcoin's 87% drop in 2021 was caused by Sam Bankman-Fried's Alameda ex-employee claims. An Alameda employee claims a trader at the firm punched in the wrong decimal, which led to Bitcoin's 87% drop on Binance US in 2021. Man, you guys remember that. Do they even have Binance US on here? Is it gone? Is it completely removed? No, there it is. Come on, be on here. Binance US. We'll check. I don't think that one's gonna have it. There it is. Drops all the way down there. And so this is versus Binance USD versus USD. I think it went to 0. I can't remember. So there you go. All right. Any other news going on here? I think that really covers it. Mt. Gox payments are delayed. It's typically always a fear narrative that always comes and goes, the Mt. Gox stuff. Just remember that if you've been in crypto for at least 2 years, you've probably seen this 2 or 3 times now at this point with Mt. Gox. I've been through it many, 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 many times. Same thing with Tether. There you go. This website's messing up. Okay. U.S. jobless claims, we got that. So jobless claims are fine. The market is really just kind of gone bonkers after the Fed meeting. So Fed came out, paused interest rate hikes. It's hard to say that they actually said anything that triggered the market because the market fell like 200 points immediately upon the release of the Fed rate pause. The market had 99% priced it in, and then it immediately paused. We typically do see this volatility the day before, the day of, and the day after. So really, I'm going to expect it's still probably going to be volatile today. Could go back up, then it could reclaim everything and then turn over and take it all back over again. But hopefully by tomorrow, the market has found its area it wants to settle at and chill at. So there you go. That's your volatility to start the day. So market gaps down upon opening for the Dow Jones. We saw it get down there to like negative 242. You can see the NASDAQ is still struggling, down 182. You can see the S&P is down 40, and the Dow's down 157. Still, somehow, someway, you got United Health and you got Netflix in the green over there. We got Coinbase, Tesla, and Amazon as the losers of the morning. And there you have it. Big, wild volatility in the market to start the day. But still, no lower lows. Again, like we've talked about, that 33,600 is kind of my line in the sand where I actually become worried. So I'm not worried right now. Of course, I'm cautious. I'm like, hey, don't you dare get down there because that would not be good. Because then I have to flip my sentiment here, which I don't want to do. But I would have to here because we don't have examples where we can go set lower lows and then keep on cranking up. But as long as we're above it, there's nothing to panic about. It's only if we do actually get below there to say, look, we've now set a lower low. That's not consistent with positive behavior. We know how high we are. We know this 15-year bull run that we're in is dang near the same size as what the Roaring 20s was. We're very close. Maybe that was it. But as long as we're maintaining the higher lows, everything is still lining up of like what we see in typical recessions. And again, everybody tosses around the word recession really, really freely. I'm not in the belief that the next one is a recession. I'm not in the belief that it's a recession. I'm in the belief it's a big one, much bigger than just a typical recession or anything like that. And I do that just because I look at charts, right? And I say we're as high as we were during the Roaring 20s. That's how high we are. And it's not just on the Dow that's like that, right? It's the NASDAQ, it's the S&P, it's all of them have created these insane bubbles. Like in 2020, mostly that's consolidated there in like the NASDAQ, right? Where the NASDAQ prints this insane bubble. We'll take a look at it. All right, so like here's your NASDAQ, right? And the NASDAQ, just the whole bubble ends up popping. Right, you get more of this kind of action over here in the S&P and this kind of action over here in the Dow Jones. Well, remember, you had like a full-fledged bubble and bubble pop happening in the NASDAQ alone, right? But now, not only do you have the bubble over here in the NASDAQ, which is very close, but not there, very close to a 4.236 extension. You got the S&P, which has hit the 4.236 extension. And then you got the Dow Jones that is hit this 4.236 extension. So you have this not hit, excuse me, it's still below it. So you have this confluence of everybody kind of getting into these same regions at the same time. And so my thought, we freely throw around that term of recession. And I get mocked on Twitter for saying the word Great Depression. But the examples we have of when we've gotten to these types of levels are precisely of that. That is what happened. And so we haven't had a time where we get to these levels and like this without it being that. So... right, there's your Roaring 20s. There's your Great Depression. So I'm not here to scare you, and this is just to show you exactly how we have behaved. As of right now, I don't see anything on the chart saying, hey, this has begun, it has started, it came up short, it's going to remain short, we're not going to go hit it. As a matter of fact, we're still behaving precisely as we should. We're just kind of creeping along, making these higher lows happening in here, and everything is fine. But, I have to be very clear. I will change my mind very quickly if we set a lower low. I will change it to 33.6, where I will not be confident that this is still continuing to act like normal behavior. But hey, there seems to be something fundamentally breaking in the market. And the same thing goes for Bitcoin on a break of $24.7 thousand. Otherwise, I'm going to sit there. I'm going to say 12Kers, you're absolutely out of your mind. You're out of your mind. And the unfortunate thing for 12Kers is they don't realize I'm actually trying to help them. I'm trying to get them to think for a second. And you have to understand, why do people want 12K? They want 12K because they want to buy for cheaper prices. Well, why do they want to buy for cheaper prices? Why wouldn't they just want to buy now and have the prices go up right now? And I've been there, man. I know what it's like, man. It's getting washing machined. Probably had a specific amount of Bitcoin at one point. Panic sold, FOMO bought, panic sold, FOMO bought. You just don't have as much Bitcoin as you want. You want a Hail Mary trade where you make up for everything on it on one big thing. You get some big crumble, you buy the bottom, and then it goes flying to the moon. So the whole 12K theory is actually, for people who are actually long-term bullish on Bitcoin, I think it's just a make-up trade. It's to make up for it. And the point I'm trying to make is that you don't have any references. You've got nothing. You got literally nothing to go back on and look on and say that something like that could happen. You've got nothing. And you've got nothing that would say that it would reverse back up and go. I think what the Hail Mary play is that you have a mix of something where, like, you're somehow repeating 2020, right? That you're somehow repeating 2020. You're going to get this crazy C19 sell-off that's going to take you to 12K. You're going to buy it, and then it's going to rally out really, really fast. But the thing I'm trying to express in all of this is that, no, if Bitcoin's bullish, if Bitcoin's going to rally to the upside, 24.7 is going to hold. If it loses 24.7, it's probably super long-term bearish. And not 12K bearish, not 12K rapid C19 sell off, buy it, then it goes to the moon because QE starts or anything like that. But more of like, it's probably really long-term bearish, like really long-term. To kind of, can't realize that's trying to open your eyes. If you can't look at that data and you just kind of stick to that bias, I've got to make these makeup trades that I've done for being washing machine so much. Unfortunately, yeah. Okay. Anyway, that's where all that comes from, by the way. It's just to point it out. You can look at the data yourself. Anybody cheering for 12K, you have literally no data, none, to go back on to corroborate that. It's just kind of a made-up fantasy of a mix between C19 and whatever. So, all right. Anywho, all right, Bitcoin, 26,400. XRP still holding up somehow during all this wildness that's going on. The Dow down 171, the NASDAQ down almost 200, the S&P down 42. Still, you have United Health and Netflix in the green. You got Coinbase, Tesla, and Amazon as the losers, with long duration yields having pretty big rises happening over there today. So for me personally, I will be watching the stock market very closely, and of course watching the DXY, as the DXY has now gotten back to the upper bound range, which we expected. The big thing is to not see a big clean breakthrough 106, because if we do see a clean breakthrough 106, we're talking about multiple confluence things happening at the same time. If you got through 106, if the Dow cracks through 33.6, if Bitcoin cracks through 24/7, you have like a confluence of multiple things all happening at the same time, and things could rapidly deteriorate very quickly. So these are things that we're watching, but we also said when we get back here, this is where the extremes will happen. This is where the extreme fear will happen throughout the market. You're experiencing it. We're living in it right now with a lot of price action happening in the market. And of course, the narratives. What do we got? We got Fed being scary, and then at the same time, we got long duration yields rising. And then what do we have? Now we have government shutdown. set up for 9 days. So we've got like the stack effect all happening as we get back in here. So that's what we'll be watching throughout the rest of the day. But as expected, volatility the day before, day of, and day after with the Fed. Hopefully it settles down by tomorrow. All right, I think that's it, guys. That's really it. Lots of volatility from the Fed. You got a government shutdown looming. We'll look more into that and see if that progresses into anything and what the consequences of that would be, or if it is just political theater. The Dow, big moves down today. We'll look for supports to come in. Bitcoin still sitting above the lows, still sitting $1,700 off of the lows right now. XRP holding steady. The dollar back up fighting against that range high at 105.6, right? So how close can you get to that 106 without scaring the death out of it? We're right at it. So, all right, I'll hop into the chat after rambling for a half of an hour already, 30 minutes, dang. All right. Jerome T gifted by 5 BCB memberships, my brother. Thank you so much, Jerome. Oscar says, happy birthday to Pat. Hit the like button. Happy birthday, Pat. And Oscar also gifted 5 BCB memberships. Man, thank you very much. Followed by Gator, dude. Gator, thank you very much. Gift 5 BCB memberships. Nagy Day says 108 to 109 DXY and then 20K Bitcoin. Then we'll see. So what content creator is telling you that? I think those things would not be then we'll see. It'll be then doom. Then Doomtown. I don't think we have to wait for 108 to 109 on the DXY to get worried, or 20K for Bitcoin. 24.7, watch out. That's not consistent with any type of recovery for Bitcoin, and it's not consistent with this either. If your blueprint of 2023 is what happened in 2019 into 2020, you have the wrong blueprint. Wrong blueprint. Okay? Just make sure everybody does know that. This is not the same thing. Your same thing would be like this. Right here. Way up here. It's like we're hanging out at like 50K. Jerome, again, my brother. Thank you very much, Jerome. I appreciate it, man. 5 more BCB memberships. Thank you. Hodling Nate, August 21st. Fed repo, Treasury rate, China lending rates. August 21st. I'm not sure what your question is there, dude. Bro. I don't know, hodling rates. Hodling Nate. Ben 10 says, hey, BCB, any long-term thoughts on VeChain? I haven't, man, and I haven't stared at that chart, bro. I'm not going to bring it up today with everything else going on in the markets. VeChain, I get asked about VeChain all the time. Congrats to VeChain holders. You got listed on Coinbase. I guess the gas token as well, VRHO, is that right? It got listed on Coinbase as well. I think you guys have gotten a nice like Coinbase pump and something like that. Working in supply chain management and understanding like that whole world of it, I did very much realize that people just did not care where things were manufactured from, or just care about it at all. And I just can't wrap my head around why a token, why we need a token for that. It's just been beyond my understanding. So it's the wrong person to ask. I'd ask somebody who's like thoroughly into it. Beyond, for me, it's just something like it, having shipped like lots of 40-foot high cube containers across the world. It's something I would never consider using. So I don't know. Joel Coleman, do you think the markets would have to completely collapse before we get the tokenization of stocks? I don't know. Andy Philpott says, happy belated Wednesday, my dude. Crypto Rico. Hold on. James John. It was your first time, man. You sent 2 of them. You didn't send a message, brother. I appreciate it. I hope you didn't like struggle to figure out how to hit the button to type in there. Thank you, James John. Crypto Rico. Hey BCB, thanks for all you do. Do you think metals like gold and silver are a good exit strategy to wait the gloom and doom after the Dow all-time high? Well, if we get a Dow all-time high. Again, this is one of the complicated things because we've gone through it. I've proved it in all types of stuff. I've made YouTube videos on it. I've even made videos, course videos. I've made newsletters on it to show, and I've written Twitter threads showing all the correlation between gold, stock market, and Bitcoin, right? Very clear correlation of Bitcoin to equity markets. And then when it comes to rallying bull markets, inverse relationship between gold and equity markets, which also means inverse relationship between gold and Bitcoin. We can range and bounce around and do all that stuff, and we can move together in those ranges. But when it comes to like actual, real multi-year bull runs, they're not on the same time frame. Gold will go while Bitcoin and the stock market are pulling back, and then the stock market and Bitcoin will go while gold is pulling back. What we do see is if there's like a liquidity event, like we've seen over in the Dow, gold can be in a nice big fat uptrend, and then a liquidity event can impact it, right? Temporarily, and then the bull trend will continue. What we don't have the data on is if this is right? If we shouldn't be just worried about recession, but should be worried about the big D, Great Depression, right? We don't know how gold behaves in that circumstance. We just don't know. We know how it kind of behaves through these different time periods and these different time periods in here. What we don't know is what gold did during here. And the reason we don't know is because gold was a fixed price. So what we do know is right around the government made everybody sell back their gold and repriced it from $20 to $35. So markets crumbled and crash. Gold is a fixed price. And then by the time we get here, the government's like, give it all back to us. And then, okay, now you can have it all. Give it all back to us for $20. Okay, now you can all have it back, but you're going to have to give us 35 for it. Right? So we don't know how it would behave necessarily in this particular moment. We look at let's do this. All right, there's NASDAQ. So you can see when the NASDAQ bubble popped right here, right? It still took, right, a year, right? Gold essentially reversed pretty close to the top of the NASDAQ after being in a bear market for, 15 years and then rallied up off of that. But was the timing of it exact? Not really. It's kind of like during kind of like this liquidity spillage, right? It still wasn't ready to go. So I'm uncertain that we really have enough reference points to say if it is that bad, right? Right. So like in this one, right? So here's the Dow, right? The Dow has just been rampaging, gold and a bear, and then finally we stop for the Dow. We go into a broadening range, right? Higher highs, lower lows, right? Great financial crisis. And during this point, as we get here and enter this long range, gold goes rallying up into it. And you can see here during the great financial crisis, gold does take a spill here during this great financial crisis, but still it continues going until finally the Dow breaks the great financial crisis and boom, gold goes into a bear. Or the Dow breaks out and gold enters into a longer bear, right? Then we enter into a new range right in here. As we enter into this new like 3-year long range, what do we do? We rally out of here. And finally, once the Dow breaks out, nothing, right? So we don't necessarily have evidence to suggest in a moment like this or a moment like this, is gold does gold play positively during a moment like that? While the broader trend can remain intact, and like you can look at here during C19, it's hard to see. Let me see if we can do this. Right here. Right, you could see gold's in this uptrend, but even in a liquidity situation, gold still takes a whack with it as well. So I don't know if there's necessarily evidence to suggest in the event of a liquidity crisis or a liquidity event, a panic situation in markets, would gold be okay during that moment? I don't see evidence to suggest that, like, in that exact moment things are okay, but it doesn't necessarily mean it's very long-lived too. So it's a difficult one to answer when you say, you know, are they good exit strategies to wait for the gloom and doom? Cash seems to always be king, cash and treasuries. But yeah, I don't know. I think I answered your question. Thank you, Crypto Rico. Andy Philpott, my brother, he gives 5 BCB memberships. Thank you very much. Eric Villarreal, has government shutdowns signal a rally in the markets? Let's go look up. When was the last government shutdown? Okay, we had a 35-day shutdown in 2018 to 2019. Do we have the dates on it? That's funny. December 22nd, 2018 is when the government shutdown happened. It's like when we had already capitulated in Bitcoin. We'd like already finished. December 28th. No, 22nd. Right there. Until January 25th. I don't know if I'd say there's any, right? I mean, we had already completed capitulation. Capitulation had already happened. You had also come in and hit the 200-week moving average at this point, right? So like structurally, you were there. I don't know if I'd say there was any correlation of that during that government shutdown window right there. Definitely nothing exciting happened in the market at that time, but we can move to the stock market too. Let's go. I've got a lot going on this screen. We'll take this off to clean it up a little bit. Whoops. December 20. Right, so they closed on a Saturday. So midnight on the 22nd. So we don't have that. So we're going to do the 21st. So we can see, like, this would have been the first trading day. So like they would have shut down on the 22nd. Right? So this would have been Friday. Then this night at midnight, when it turned into the 22nd, the government would have shut down. And then the next day would have opened right here. Right? This would be Monday, and the market continued down and then rallied until the 25th. But one thing to notice, right? What happens leading up to the shutdown? Right, the 10 days leading up to the shutdown, not good. Then shut down the day after shutdown, and then turn around, and then just kind of rallying sideways. I don't know if I don't know. Let's see. Let's go find other ones. So we also had, we had one in January of 2018, which was 3 days. That one's not going to be good. January 20th. That's pretty funny. Shut down right near the end of the parabola. And then it was only until the 22nd. So it's from like a Saturday through a Monday. That's it. I don't know. I don't think we have consistencies to draw between the two. Do you? There wasn't really much drawdown leading up to this one. If anything, we're parabolic leading up to this one, and this one is more of like panic selling leading up to this one, and then reversing after it ends up happening. And this, just kind of waddling during this time period. But this was standard accumulation in here. This is like Wyckoff. This is Wyckoff accumulation, and this is your last point of support version. Rather than having a spring, this is your last point of support, right, guys? We talk about that. That was spring. You can just go wham right back down to the lows, right? This is last point of support phase, creaking along in here. So I don't know. Do you draw anything from that? Really, I don't really. So I don't think we have data in here that I can consistently see in the last couple of them to say that the market behaved the same each time. I don't see it. So I don't know. Jerome T. Yo, BCB, Ripple owns about 5.5 billion XRP. If XRP ever hits, $7 to $10, wouldn't that make them one of the richest companies in the world? Well, it'd have to be an understanding of order books. If I own... All right, what's a banana worth? A banana's worth like, what, 25 cents, right? If I own 100 million bananas, all right, now let's just say I own 100 bananas, right? That means my total stash of bananas is, $39. But then I go find somebody to buy it. And for a short while with like inflation and insanity of like supply chains, suddenly, bananas are worth 60 cents a banana. So it's now worth 600. But like, if I go try to dump all my bananas onto the market at one point, are there enough buyers that are willing to pay that? I don't know. That was a really stupid analogy. But the reality is, if they even attempted, that was a problem that happened with FTX, if you don't understand. So FTX was marking the value of their assets at mark to market, essentially saying that whatever they owned, even if they owned highly illiquid altcoins that nobody has heard of, they're marking them to the tune of being worth billions of dollars. Even though the order book maybe only had $1 million worth of liquidity in it, they mark to market it being worth $1 billion. If Ripple attempted to sell 5.5 billion XRP on the market, what do you think would happen? Price would completely crumble. And it would just completely lose it. So it's not necessarily that it would. Like on paper, it would look like, hey, we have this, and like part of it's worth that. Like maybe like 50 million of those XRPs are worth that, or 100 million of them, but not the whole 5 billion of them. It would depend on liquidity and how many buyers there are at that time, right? And so you can't really mark to market it. David C. says, will you please look at Newmont Corporate gold miner? Uh, I'm not going to do that, man. I appreciate the super chat, man, but I'm not going to pull that up on this channel. The gold miners. It's not what we're here to do. For example, just so you guys know, in the cryptocurrency market, in cryptocurrency influencer world, right? What happens? All these crypto projects pay influencers to promote the coins, right? We all know that, right? Of course, not here. You guys have never ever seen that one single time here. That's why we don't even talk about low cap gems, right? We don't do any of that kind of crap ever. But in like the YouTube world for like gold and silver, like in metals, like you guys know that I like coin roll hunting. I like looking at all that stuff. Those guys like who make YouTube videos about silver coins and gold coins and all that stuff, they get approached from the gold mining companies. And the gold mining companies try to get them to promote whatever gold miner on the channel. Personally, I don't care about miners. I don't have any way to know whether or not miners will do well. And I get asked even on this channel a lot about Bitcoin miners. I don't know how that would be considered. Like they have to have such an insane plan on how to overcome their equipment going obsolete at some point. I always view it as like this generation of miners will become the graveyard of the next generation, right? Every time around. And so if you're investing in like a Bitcoin mining company, you better know dang well how they're going to overcome that graveyard that happens to every single mining company. Because whatever equipment they are using right now is totally obsolete in 4 years from right now. You have to be able to be more efficient, use electricity better, overcome hash rate, right? Electricity costs, all that stuff. That's why for me, like miners, they're almost in like a death trap to even consider buying any of them because of that. Just in the end, the problem with them. Weezy says, do you still make gold and silver? I haven't done that in years. C19 really slowed it down. So the banks like all made it to where, like, remember the coin shortage, guys? Made it like impossible. So it kind of came to a halt in 2020. Philip Mann gifted a BCB membership. Thank you, brother. But I don't want to bring a gold mining thing up because I know how much gold mining companies pay to be in YouTube videos, just so you know. So that's my hesitation on it. People ask me about a lot of stuff, but I am like heavily into gold and silver, and I know how much these gold mining companies pay to get themselves promoted on YouTube videos and have influencers show them. So I don't want to give them free advertising. So, all right. How we doing, stock market? You holding up okay? There you go. There we go. A little bit of relief. How about that? Okay. That's all we got to do, guys. You just ramble for 52 minutes, and then you let the volatility kind of chill out. There we go. Deep breaths, everybody. DXY. Ah. There we go, guys. All right, so what are we at? All right. So you got Bitcoin still holding at 26.5. Of course, the big watcher out there today is the stock market. We saw the Dow down like 250 at one point. Nasdaq's down 150 still. You got the S&P down 74. We sat there and we were talking about, hey, United Health and Netflix are somehow still staying in the green. Sure enough, now we even have Microsoft and Apple joining in the party, now being in green this morning. Again, it's still early, guys. It's probably going to be volatile today. The day before, day of, and day after, typically very volatile. We're definitely wanting to see these levels just kind of stabilize in here. It's not my expectation that we're going to reverse today and go absolutely moonshotty, but definitely like seeing some type of just settling down happening in here throughout the rest of the day would be like optimum. XRP 50.5 cents still holding along okay, and DXY like seeing a little bit of a bear divergence showing up there as it sets that new high right there on a big bearish divergence, and then kind of cooling off today. Again, we're back at that 106 level. We expected a lot of extremities to start happening as we approached up to this area right in here. Now we're just looking for things to turn around. But I think the chaos of the morning has started to settle at least a little bit. Just kind of keep your eyes peeled throughout the day. Otherwise, there's nothing to go crazy about on like breaks. And I think that's one of the struggles with YouTube videos right now is trying to emphasize talking so much about a range. How much are you really going to say about a range where the real things that matter are here and here? I got asked a text message. Eric messaged me and he had said, what levels would get you excited for Bitcoin? And I said, well, the only thing that would really make me excited is if we got above $32,000. And he was kind of like, dang, really? I'm like, yeah, otherwise everything else in here is just a lot of noise. There's just not much to draw from here. And especially with how chaotic ranges can be in the middle of these areas, there's not a lot to draw out of it. We can like do this kind of stuff and be like, oh, wow, it looks like it's trending. But again, we're still like in retracement levels, right? And so everything is really just a bunch of noise to the upside and to the downside in the middle of it. And the only true things that matter are if we take out the range lows or the range highs. So we're kind of just in a super boring period. And of course, you have the market participants who are all completely on different sides. But they're on different sides for the same reason. And that's the thing. Nobody is here in this market watching cryptocurrency YouTube videos, watching Bitcoin videos, and cheering for the death of Bitcoin. Nobody is. Unless you're nuts, unless something's like real wrong with you. And I understand that when it comes to the people who are screaming for 12K. And so I come so passionate from it because I know the people screaming for 12K are not screaming for the death of Bitcoin. They're screaming for, I'm sitting on the sidelines and I want to buy lower. I want to double my Bitcoin stack, right? Because what is 12K? It's half of what we are right now. Essentially, however much USD they have sitting in their account, they can get 2 times the amount of Bitcoin if we do something like that. And they want that because they've seen what happened during C19. They saw that we can have this flasher that just shoots to the downside, and then the Fed steps in, and then boom, it instant recovers. And so that's this fantasy of, I'm going to buy it super cheap for half of what it is. I'm going to double my Bitcoin stack, and then it's going to instantly fire back to the upside. And the pain is not going to be long. It's going to be very short-lived. And so I know that these people come from a bullish standpoint, the 12K callers. They're not coming from, I'm cheering for the doom of Bitcoin. It's coming from a misunderstanding of where Bitcoin is right now on the grand structure of ranging, boring, ranging. And that you actually have something structurally wrong with Bitcoin to go any lower than it is. You have no references to go back on for Bitcoin's history to say it's okay. And you can't lean on 2020. I'm really sorry. If you want to use your most recent bias to say, hey, no, 2020 is because of this thing. Show me in any way how this is in any way similar to this. Show me what makes this less similar to this than this. There's just nothing similar. So I come at it from a passion standpoint because I'm not like fighting 12Kers to say you're stupid or to say you're an evil person because you're bearish, because I know you're not bearish. I know that you are a bull underneath it all. You're just wanting to double your stack of Bitcoin. And you're thinking that you're going to get a C19 and that it's going to be that awesome and that easy. And it's not going to happen. That's not what we're doing. And you have to understand that. And so I'm just trying to shake you. Wake up! Wake up! All right. I'm going to get out of here before we get spicy. I appreciate you guys all coming. See, there's Nelson. 12K is not a fantasy. 12K is Bible. Right on, man. Right on. All right. Do whatever you want. I won't be buying 12K if it ever happens. I mean, I'm just telling you that. T. I know what you're doing, T. You want the spice. So, all right. So there we go. Looks like the Dow now back to down 125. We're probably just going to be a washing machine all day. You still got stuff in the green, though. You got United Health, Microsoft, Netflix, and Apple still up there in the green. Pat. Welcome, dude. Happy birthday. All right, so we still got some green over here in the stock market, which is nice. Not see just complete gloom and doom. Bitcoin 26.5, holding along in there. XRP at 50.5. Dow holding. The one to watch, of course, everybody's pretty nervous of has been the DXY. We've waited for it to get all the way back to this level. We're getting to a level now where a reversal could show up now. So we're there. We've now reached really just almost right back up to the peak of the range. This is what we've watched for. Now it's time to see, let's not hit the Goblin Town level, or at least let's not exceed through it. So we are seeing downward action, at least over there in the DXY today after an initial push up to start the day. This is kind of like pre-FOMC DXY now happening in here. So hopefully things can kind of recover throughout the day. Expect volatility. And really the thing to cheer for is tomorrow, some sense of stability. The market is like repricing itself like we talk about, right? We were saying with FOMC, like the market kind of like sets itself up. Then there becomes volatility during FOMC. And then the market kind of reprices itself after FOMC and after forward guidance and all that stuff. And so that's kind of where we're at right now. We're still in the thick of that day after repricing. You know, emotions all over the place, expectations that may have been differently. Everybody's kind of restructuring their portfolios all at the same time and getting them the way they want them. I think that's where we're at right now. And of course, you're seeing yields, long duration yields, have strong days today too. So, all right. MC Crypto BCB, could you show again the 4.236 market cap extension with inflation and corresponding price for Bitcoin, Ethereum? Man, that would take me 15 minutes. I don't know if I'll be able to do all that today, man. You could do that on CoinTrader.pro. Go. I'm actually trying to wrap the show up. That would take quite a while. We just crossed over the 1 hour mark. I appreciate the super chat, buddy, but that's starting a whole new project right now. Andy Philpott gifted 5 BCB memberships. Thank you very much. MC Crypto, you could do that. Just by, measure it out on the market cap, take your percentage, then go measure that same percentage out on the price chart, and I'll give you an idea. And that, again, that number you're looking at is if prices went up overnight. The longer it takes, the more inflation impacts it. So tomorrow in markets in the morning, if you come in early and remind me in the chat, you don't have to super chat. Remind me in the chat, and then we'll try to knock that out early in the morning if I see it. Okay. But Andy, thank you, brother. I appreciate it. Gifted 5 BCB memberships. And guys, I hope that you all have an okay day. We'll get through today. It's expected to be volatile. And then hopefully tomorrow is where things start to settle down. But definitely this isn't out of line of how we typically act. We can see the DXY still continuing to shuffle down here. And we can cheer for that today at least. So, all right. I am wrapping it up. Guys, I want to thank you all so much for tuning in. I appreciate you all watching so much. If you could, please like this live stream. Please give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice, and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Look at silver. Have a good one.